Uh, Hi, Dominique. Welcome again to another week of a week ahead. And for a lot of our kind of viewers or listeners, it's been a real pleasure having you in the office the last couple of weeks, and which has been great. And I love doing the podcast. I was just listening to a little bit this morning, which was a lot of fun, by the way. So obviously, your calls and what you focus on is front and center for like the 1,000th week in a row. This past week, particularly, I think, with all the focus on inflation and with the focus on potentially slowing growth and obviously the 75 basis points. So maybe we'll do a quick recap for thoughts over the past week, and then can kind of dive in for the week ahead. And congratulations on what looks like a much nicer background than I currently have. Although mine is actually not bad, it's just fake.
No, I'm lucky to be on holiday in a wonderful place in Sicily. So yeah, it was great being in London.
And a very well-deserved holiday. You've heard me say 1,000 times. You honestly are amazing.
Thank you. Thank you. It was great to be able to talk to investors directly during these two weeks in London. Yeah. But I am hoping that everybody gets a break this week, because there was so much volatility last week. The Fed broke its previous forward guidance to announce 75 basis points just 2 days before the meeting. I was a bit disappointed by the SCP. It looks to me like the Fed is now responding to basically the latest inflation release. So that's going to unfortunately create more volatility for markets, because short-term data by nature is very noisy. So I fear we are all. I'm hoping we are all enjoying a well-deserved rest, but I fear this is not going to be smooth sailing going forward.
Right. Okay. So for maybe not our most sophisticated investors or most sophisticated rates traders, the 75 basis points we're pretty happy with. They telegraphed it. They delivered on that. But their projections of where the potential rates will be going, or the terminal rate, was not as high as you would have hoped.
Yeah, I mean, it seems that they are really undershooting the mark, given how high inflation is and how much momentum we still have in the economy. So I suspect that, if you ignore the noise, we will continue to get a trend of strong data points. So I'm expecting more of those cycles where the data comes out strong, the market starts pricing more than what the Fed has announced, and the Fed delivers, because inflation is so high, they don't really have the possibility of delivering less than the market without losing more of their credibility. Yes. And at the same time, given that their models are breaking down, their inflation models are really not, predicting what has been happening, the market is basically their benchmark by default. Yeah. So my expectation is that we get 75 basis points in July, and then in September, November, and December, 50 basis points each. Obviously, as I said, if the data is very volatile, so we could have, I think there is, for instance, a good chance of an acceleration in a wage inflation, given where we are now. So this could very well, create a risk of another 75 basis point hike before the end of the year.
Right.
But the bottom line to me is, given how the Fed is working, we just have to expect more volatility.
Yep. Yeah. And we all know that markets don't love volatility and uncertainty. But it's a good thing, like a very clear, I think investors should always be taking a few key points away from our discussions every week, I hope. And I think one of the points which you brought up a couple of times, and I'm not sure all our clients fully understand, which is the Fed has put themselves in a position, as you said, like if they can't totally trust their models and they're more kind of dependent upon the market helping to drive them, then in this environment of high inflation and also potential political pressure, they will err on more aggressive than less aggressive. So because they basically have to, and they're really afraid of the market just totally losing faith in kind of faith in them bringing inflation down. So I think that's an important point. One other thing I wanted to touch on before we talk about next week is, retail sales, I think, kind of spooked the market a little bit, and maybe also a bit weaker housing data. Do you see that as a beginning of a trend? Did the market interpret right or incorrectly?
So retail sales, to me, it's probably the switch from consumption of non-durable goods to services. I mean, it's a volatile data, it's a partial data. We get a full picture of consumption when the personal spending data is released. And this month, I believe it's on the 30th, so at the end of the month, but I wouldn't, overreact to one data point.
Right. Okay. Okay, and then for the upcoming week, what should Monday's a holiday for the U.S. and if all the markets are closed. But for the week in general, what should clients be focused on?
So we have the Humphrey Hawkins testimonies, so the Powell's biannual testimonies to Congress. And I think what is going to be interesting is that it will give us a gauge of the political pressure that the Fed is under. I mean, as we both know, there is a good chance that the Republican Party is going to regain control of the House, possibly control of the Senate in November. And Republican senators of late have been very disappointed in the Fed's inflation policies. So it will be interesting to see how they react to this last set of Fed decision, because ultimately what is going to force the Fed to get tough and tackle inflation head on, it's political pressure. So it's going to be either pressure from the public, where inflation is being so disruptive to so many people, or political pressure. And by listening to the testimonies, we will get a sense of where we are in this process.
Okay, so you're watching, and you'll be looking out for not just Chairman Powell's comments, but also the Republicans kind of how hard do they go, and what do they kind of really try and drive home, I guess, or what message?
Exactly,
I guess
because
it's clear that they would want to disassociate themselves with the inflation that's everywhere in the US and make it clear that it's the Fed and by de facto Democrats. And obviously the Democrats will try and do the opposite somehow.
Oh, definitely. There is this view among Republican senators that the Fed has gone woke and has lost focus on its inflation mission. And so it could be a bit tricky. In terms of what Chair Powell himself is going to say, I mean, he's going to, as usual, and very sincerely say that the Fed will do everything in their power to tackle inflation, and he's going to defend the decisions that have just been taken. So the interesting, the new news in a way is more likely to be on the side of the questions and on the side of the answers.
That's interesting, very interesting. Okay, so what else? Any other Fed speakers that will be, you're looking out for, or this is kind of the main thing and the rest is just data?
So, we have a whole gamut of speakers from the doves to the hawks. I think we know what the doves are thinking. The hawks, it's more interesting. I'm very curious to see what President Bullard is thinking of the last set of decisions. He's been ahead of the curve on inflation. Let's see if he thinks that what is in the SCP is enough, or whether he gives hints that he might want to do more. I mean, what is interesting about Bullard is that, like me, he sees the Taylor rule as a benchmark that the Fed funds needs to get to, but he picked an estimate of the Taylor rule that is very biased downwards. He used a measure of inflation called trimmed mean PCE, which at the last reading was about 3%. But these measures tend to be very volatile. So for instance, the trimmed mean CPI had gone down over the past few months by close to 150 basis points. And at the last reading, it jumped by more than that. So I am waiting for the next PC data release to see how President Bullard adjusts his message and his estimate of the Taylor rule.
Can I ask a quick question? On the trim mean,
Yes.
it takes away the outliers, right?
Exactly.
Are all the data points weighted the same, or or there are certain things like rent or I don't know, I guess it includes healthcare.
So
is that weighted much heavier? Or?
Yeah. So my understanding is that once they've taken out the outliers, they readjust the weight so that they amount to 100 based on the headline inflation weight. So they reduce all the weights, or rather they increase all the weights proportionately for the weight of the outliers that were taken out of the estimate.
Fine. Okay, cool. And then I guess focus on the data. So what's the key data points? And now, for right or for wrong, even though we're pretty confident we're going to, at least next meeting is going to be 75, but because, as you said, for the reasons you mentioned, that the Fed will be really incorporating, and obviously the market will be incorporating data points. Which are the key data points this week? And is every week going forward, the initial jobless claims one of like the most important points? Because I guess we haven't really seen a jump. It's been still pretty low. If you saw above 240, 250, is that be enough to freak the markets out? Probably, I guess.
Possibly. I mean, initial claims have been creeping up very, very slowly since the end of Q1. But, it's about 225,000 on average. And historically, this is a level that is consistent with a very tight labor market.
Yeah, I remember anything below 300,000 was like a great number. Years ago.
Totally. I think it's been so difficult to keep our bearings in this cycle, because before the pandemic, we had a very disinflationary economy. During the pandemic, we've had hyper stimulus and an extremely fast economic reaction. So it's really hard to know, what's what. But my bottom line with the claims and also with the real estate data is that we're getting the picture of an economy that is moving back to trend, that was growing far above trend, is going back to trend, but not an economy that is headed for an immediate recession.
Right. Quick question before we go into the other data points. I've seen people sharing like the Atlanta GDP forecast for Q2 around 0. Is that a concern? Do you see second quarter GDP coming around 0 in the US?
not at this stage. And I would add that this GDP data is extremely volatile. I mean, the Atlanta Fed estimate. I mean, look at where we are with NFPs. I mean, average 400,000 a month. Look at the growth in consumption. That's well above inflation, because households are basically spending the government handouts they got over the past 2 years. So no question, the economy is slowing. But I'm certainly not part of the groups that expect, a recession to happen before the end of the year.
Yeah. I mean, I'm just looking through, US PMI predicted manufacturing PMI 56.3, US services PMI 53.7. I mean, these are still fairly strong numbers after we've had, absolute kind of booming growth. So yeah. So what else should investors be looking out for this week?
So definitely the home sale number, existing home and new homes, those numbers have been falling fast, but they were growing at an unsustainable rate before, which can be seen by the very fast price increases. Again, the market is expecting existing home sales to stabilize. One thing to keep in mind in terms of existing and new home sales, in terms of GDP, what is important is not existing home sales, because they are just a transfer of property from one person to another. There is no new demand there, no new housing investment. It's just a gauge of the strength of the market. What is more important is new home sales, because new home actually represent actual investment in real estate. Yeah. So again, what's important with all this data is to keep track of the big picture and get a sense, of are we normalizing or are we crashing? You just quoted the PMI numbers. To me, it's more a case of normalizing from unsustainably high growth than of crashing down.
Okay, great. Awesome. Anything else investors should be thinking about?
No, lots, but nothing really pressing. I'm just hoping that everyone gets a break.
Yeah, we all need a break. Okay, cool. Well, on that note, enjoy the sun. Hopefully, have an Aperol spritz on us, and we'll speak soon.
Take care, Andrew, and good luck, everybody.
Thank you. Thanks. Bye.